Hello and welcome back to Coin Matters channel. When a token is sufficiently decentralized, according to former SEC Director of Corporation Finance William Hinman, he is no longer considered a security, as he stated in a public address on June 14, 2018. Emails and records from within the SEC demonstrate that senior officials frequently cautioned Hinman that his statement was not faithful to the law and would severely confuse the markets. It looks like the 18 months we've spent waiting for the legal system to deal with the XRP army will finally pay off. We're probably in the home stretch now, and the judge's verdict is the only thing left to decide. Recent events suggest that the regulating body has unwittingly implicated itself on multiple instances. That's why I'm confident that not only ourselves, but the entire Bitcoin industry will emerge victorious. A recent tweet by Brad Garlinghouse made total sense. Have a look. It ought to be obvious at this point. Contrary to what Chair Gensler claims now, he is not at all an advocate of innovation. This tells me that the SEC is trying to divert attention away from its FTX fiasco by filing numerous lawsuits. It's humiliating to see an unelected bureaucrat flailing around like this because his agency lacks the authority he craves. Ripple has been fighting the SEC for a while now. I wish I had more time to elaborate, but it's been 18 months already. Don't want to get ahead of myself. To put it simply, both Alderity and I agree that the wait was worthwhile. The former head of the SEC, William Hinman, made headlines when he said in a speech that a token is not a security if it is sufficiently decentralized. The decision to sue Ripple for allegedly selling unregistered securities caused widespread outrage among XRP supporters and crypto investors who flocked to social media to vent their displeasure. It's been 5 years since Bill Hinman gave his infamous speech, and thanks to the SEC's lawsuit against Ripple and 7 court orders, we can finally share what happened behind the scenes through the now public emails and drafts of the speech, as Stuart Alderity recently tweeted. We have been sitting on what we found in the Hinman speech records for almost 2 years and 7 court orders. The SEC's head of trading and markets cautioned Hinman that his speech could lead to not just misunderstanding but worse confusion on what is a security, since he was making up factors that, quote, go beyond the typical Howey analysis, as in not in the law. Hinman paid him no mind. Those assets may not constitute an investment contract if the network the token or coin is meant to operate on is sufficiently decentralized and buyers no longer have a reasonable expectation that a person or group would carry out critical managerial or entrepreneurial operations. Eleanor, who has been vociferous in the Ripple versus SEC case, revealed in a tweet that she had learned this information through Hinman docs. Secondary market issues are exceedingly complex and go beyond the scope of this presentation, as attorney Laura Garcia of the SEC, Gov's Office of General Counsel said. In addition, we need to talk about whether or not this presentation has to go into such depth regarding aspects that seem to speak only to individual consumption and use. Coinbase General Counsel, Paul Grewal, recently commented on the pending SEC litigation. What we have been saying to the Third Circuit, Congress, and the SEC is supported by the regulatory gap evidence from the Hinman emails. The securities laws are incomplete when it comes to digital assets. Securities law aren't meant to rule over all digital assets, and many digital assets are not securities. According to the same source, Hinman needed to more closely and explicitly tie his speech to the Howey study. Hinman not only disregarded him, but also fabricated additional aggravating circumstances not previously considered by the Supreme Court. In light of the Howey situation, I just wanted to make a few observations. This is by no means an all-inclusive list, but they are considerations we give attention to. SEC General Counsel expressly advised that Hinman remove the line from the speech because it is legally irrelevant whether or not someone retains an interest in a token and is motivated to take action to raise its value. Again, Hinman disregarded them and asserted, without providing any basis in law, that it was vital to inquire. Since that individual or organization still had skin in the game, so to speak, they would have an incentive to see to it that the digital asset's value rose. Both. Spending time buying and selling in markets. The General Counsel also disagreed with Hinman's view that information asymmetries would cease to exist in a sufficiently decentralized network, citing Vitalik Buterin as an example of someone who would have more information than a retail holder. They cautioned Hinman that opening up this quotation, other category, and putting emphasis on information asymmetries could expose a regulatory gap that the SEC lacks the authority to address. And once more, Hinman paid them no mind. The capacity to identify a promoter or to make the needed and someone that could really make the requisite disclosures becomes, in many circumstances, impossible or, at best, far less important as the network becomes more fully decentralized. On June 4th, Hinman stated that he didn't see a need to regulate Ether as a security and scheduled a conversation with Ethereum co-founder Vitalik Buterin for later that week to, quote, reaffirm our understanding. According to the SEC's own General Counsel, it would be difficult for the SEC to, quote, take a different position on Ether in the future, hence they recommended against include any direct remark about Ether in the address on June 11th. The following day, Trading and Markets reported that the Ether remarks were, quote, adding to the existing misunderstanding. In continuation of his remarks, Stuart Alderete said there has to be an inquiry into who or what persuaded Hinman, why conflicts or the appearance of conflicts were overlooked, and why the SEC promoted the speech despite knowing it would cause more confusion. Finally, the remarks by Hinman should never be brought up again in any serious discussion of whether or not a token is a security. Unelected bureaucrats have a fiduciary duty to uphold the law to the best of their abilities. They are unable to, while Hinman was making up new regulations. Where do we go from here? The first step is to take the speech down from the SEC's website immediately. The truth is that Hinman deliberately sowed chaos in the crypto industry, and the oversight body has no idea how to undo the damage. Even more crucially, it appears that someone pushed for this speech because they wanted Ethereum's transparency and security to be better understood. It's clear that the SEC doesn't understand cryptocurrencies and should refrain from filing litigation left, right, and center. It would appear that they are attempting to confuse the public in order to prevent anyone from associating the Hinman speech with the need to question their activities. I won't use the fraud word, Garlinghouse continued. I'm no expert on the law, but I think we can all agree that our government officials ought to behave honestly. Despite calls for transparency from the sector, the SEC continues to approach cryptocurrency in poor faith. The century-old mystery still stands. Is XRP ready for a major bull trend now that the SEC case appears to be in Ripple's favor after the release of Hinman's files? To find out, let's delve into some technical analysis and examine the XRP price action. An astute analysis of recent XRP price movement is shared by the crypto community. Despite March's wick, XRP's weekly chart is forming a hanging man reversal pattern with bearish divergences. Over the next 2 to 3 weekly candles, a reversal back under the white dotted line is likely, especially if volume confirmation occurs at level 258. He continues by speculating that a weekly closing over 58 would provide this cryptocurrency with the necessary bull power to propel it to new heights. Meanwhile, Warren Davidson has introduced the SEC Stabilization Act to oust Gary Gensler and reorganize the SEC. He said that the United States financial markets need to be shielded from a dictatorial chairman like the current one. A statement that meaningful reform is needed and that Gary Gensler should be removed as SEC chair. And if Gensler gets the boot, we anticipate a meteoric rise in value for this coin all the way to the summit. Even more intriguing is the fact that we can at last receive the crypto clarity we've been seeking. In reality, Gensler is preventing the crypto industry from realizing its full potential on purpose. To what end, I wonder? Does he have a sponsor who is paying his salary? Remember that we are not a certified financial planner. The content of this channel is solely for amusement purposes. Leave your thoughts in the space provided below. Let's talk about this. Please trade responsibly and remember the importance of independent research. Please hit that like button and hit that subscribe button down there. See you in the next one. Bye.